Hello everyone, welcome to my YouTube channel, André Cardoso here. Thank you very much for being here. As always, it's a pleasure for me to share some of those patterns with you, especially with those who are learning process. For today, I want to share a few or a couple of those events. One of them is the one that I shared a few seconds ago with my subscribers for the Norwegian krone. Norwegian krone is trading a trend line support, when ascending trend line support, and it has completed the bullish alt-bat pattern, or at least it has found some support right above, just 1 or 2 points above the 113% Fibonacci extension, which may offer some support. So I've created already a scenario to get involved with. So we have our risk-reward approach for this specific setup. So I admit the price, I provided some room for the price to find support. So if the price decides to trade below that completion point, I'm not expecting that to happen, of course, but if that happens, I provided some room for the price to find that support for me. Of course, default expectations for the pattern, 38% Fibonacci retracement as a default target, and then a second target projected above, which is too soon to start to think about it. But well, for now, this was a pattern that I projected before. I was expecting the completion point, and today the market has decided to complete, or a few moments ago, the market has completed that bullish alt-bat pattern for me. So I'm trying to I got involved in this trade, and I'm trying to go with that expected bullish momentum for the Norwegian krone. So another pair that I want to share with you, and this is kind of a teasing video just for you, which you that are learning process. I believe it's important to get information somewhere. I'm not telling you I'm the best one to offer you that information. I believe we need to search for the right person to transmit you the right information and the convenient information for you. If I'm not that person, you need to search other person to share content with you and to try to guide you.
Webinar online.
My webinar online, which means Forex Analytics, is already live at this point just for their subscribers. So we have a daily webinar just for our subscribers at Forex Analytics. As you know, I'm part of their team. I share all those charts and all those advanced pattern formations there at Forex Analytics. Of course, I have my own and private Telegram channel where I share some of those opportunities among my subscribers to get involved with the market, at least for those who don't have time to study the market and to read the market, and they don't have actually time to learn the strategy. They just want to get involved and to participate. So I'm a vehicle that can bring that information for you. I never know the outcome of those patterns, but one thing for sure, I just push those trades based on very specific price action and patterns and for price behaviors, let's say, accordingly to those variables and criteria that I have defined for those patterns. So that being said, I want to share also other events with you, and let me share this view for the New Zealand versus the Japanese yen. So what I will show you here, I shared last week. Let me just jump very fast into the crude oil. I'm not sure if you remember, at least some of you will remember this trade setup. I'm not sure if you remember this bullish 2618 trade setup. So double bottom, or technical double bottom, a broken neck resistance, and then a retracement or a pullback to the golden fib. So I entered that trade and I was expecting a retest of these structure highs, at least a 62.10 to be reached in order to retest the highs. So that was my first target. So this is nothing more than a bullish 26.18 trade setup. So I expect a bounce from the golden Fibonacci extension, and of course I expect the market to retest the previous structure highs. As you can see, at some point the market has printed that fractal resistance right there. That's time to jump out and to wait for another opportunity if you know how to measure those patterns and how to identify the those potential pressure elements. So at this point we were approaching the previous structure highs, the 200 moving average, few points below my default target, and the price prints a new fractal resistance there. You can go into a lower time frame to identify that fractal if necessary, but at some point the market prints that fractal, let's say at this I need a reply. At this point we already have our fractal. And that being said, after the market, as soon as the market confirms that fractal, it starts to fall, and it's time to jump out from this trade. If you enter the trade from the golden Fibonacci, as soon as you see the formation of that fractal close to the previous structure highs, it's time to exit your trade, or at least to start to partitioning your trade. If you don't want to close everything, try to close at least a portion of that trade. And try to manage the remainings of that initial position size if necessary. Of course, what we have is the market pulling back to the entry point, to the golden Fibonacci level, and threatening the violation of the previous structural lows. So at some point it makes no sense to try to keep holding a trade that it's not corresponding anymore to the pattern itself. So if the market is disrespecting the golden Fibonacci level, violating that level and approaching the previous structural lows, eventually the market will trade even lower from here. And as I said before, at the same time that I was sharing this bullish 26.18 trade setup, I also shared the potential heads and shoulders for crude oil. We can see these as a potential left shoulder, the highs as a head, and the most recent structural resistance as the right shoulder, which makes the most recent lows at 57.25 the next zone. If that happens, we may see the price falling below the next zone. Of course, that's what we expect after the validation of the heads and shoulders. So let's stay tuned to that possibility. Let's say below 57.23, which is the weekly fractal support. Below that level we may see more downside momentum for crude oil. Okay, so now let's go again into the one that I was showing you, the New Zealand versus the yen, and why I pushed back the crude oil. The same way crude oil printed the double bottom, followed then later by the 61.8% Fibonacci retracement here to form the 26.18 trade setup. New Zealand versus the Japanese yen, we just missed the perfect V shape, because in terms of a technical double top, we have a technical double top there with the price retesting the closes of the first top, and we have the violation of the next zone, confirming the pattern as a potential reversal behavior. And reversal, why? Because the market is trading higher on a bullish momentum. So we expect that pattern to act as a potential reversal of that momentum. So if the momentum is bullish, I expect that to reverse based on that pattern. But the other pattern that we can identify here, and we have also shorted that one, I also decided to short the golden Fibonacci level above. It's the bearish 26.18 again. So we have a double bottom, or in this case we have a double top, a broken neck, support and a bounce towards the golden Fibonacci retracement level, so completing the pattern itself. So we just miss, in fact, we're just missing the perfect V shape between the tops, because this is not a V shape for me. If I need to invalidate something, or if I need to invalidate this pattern for one simple criteria, this will be the one. I don't have a perfect V shape between the tops. I have another very strong and important, in my opinion, very important criteria, which is a close below the closes of the first top, but after a retest of the closes of the first top. So I need a retest of the closes, as identified by this blue line here, the closes of the first top, and then the retest with the second top. As soon as the market trades below the next zone, it triggers the pattern itself. It triggers the potential reversal behavior. So of course, if the market decides to bounce from this support level, we will search. Sometimes it will not happen. The market will trigger the pattern, it will trade lower, we'll search for the target. But if the market decides to bounce, that may offer us the default bearish 26-18 trade setup. And by default, we also search for a symmetrical ABCD pattern. Of course, only time will say to us if the market will correspond that expectation, but that's what I'm expecting based on historical data. Okay, I shared with you before that video for crude oil that I have posted before. You can see a few examples of the 2618, I believe, for DAX, I believe for the Dixie, CAD versus yen. Also, I shared some examples there on that video, so you can also check those examples. So what we can expect, nothing more than potential ABCD pattern where AB is equal to CD. That's the reason why we can call it a symmetrical projection or a symmetrical ABCD pattern projected below. So that will put the price trading 74.44 based on the projected ABCD pattern. So we have entered this setup. I can try to show you that one. This was the very first one, the Norwegian krone was short for the SPX 500 and the New Zealand versus the yen, so we decided to short this one also from there. Euro versus yen, another short that we took before, and that's bullish 2618, one of the most recent ones. Euro versus yen, by the way, which is being pushed above and threatening the previous structure resistance and threatening the invalidation of the pattern itself. So the market decides to reject the idea for a fall after completing that perfect cipher pattern, which is unusual. It's not so usual to see a perfect bearish cipher pattern ignoring targets. So at least for now it's still valid because the market is respecting the previous structure resistance, but it's now threatening the invalidation of the pattern. I have my stops right above the fractal resistance, so I believe sooner or later the market can invalidate that pattern for me. So we were talking about the New Zealand versus the Japanese yen. CAD versus the yen, also kind of a false breakout or a potential false breakout above. We have kind of a bearish divergence, as we can see, clear bearish divergence between the highs. A violation of the fractal support will confirm this as a potential actually will confirm this not as a potential but as a false breakout above, and once confirmed we will search for the golden Fibonacci extension of the very last swing high as a potential element of support level. Actually both levels, the golden Fibonacci 161, we expect the market to bounce from this price zone and then eventually a new fall to the 224, which may offer another bounce from this price zone. First of all, we need to wait for the violation of the support level. If that happens, that may offer more downside momentum, and as soon as the market approaches those levels we should pay attention for the potential bullish sharp patterns between the 161 and then later a 224% Fibonacci extension level. But for now it's too soon to project. For now what we have is a potential violation of this trend line support, or at least one approach to that trend line support. Euro versus the pound. I need to go into a higher time frame in order to share this one with you. I projected this as a potential bullish Gartley pattern at 84.44, and the market, at least for now, it decides to not to reach those levels. So at this point I'm not very interested on this one, regardless of this descending wedge which the market is now let's say threatening the violation of that structure, which may offer more upside momentum. If the market decides to target the few levels from these lows or the recent ones, so from this price zone, 88.63, so this is the 38% Fibonacci level, or 88.65, let's say. We have also the 200 moving average, daily moving average, pointing to 89.30. So let's see if the market will search for that daily moving average and a 38% Fibonacci extension level, or retracement level in fact. Now on euro versus the Australian dollar, I shared a few of those patterns already with some of you and with my subscribers, and at Forex Analytix also. So at this point I projected, I called people attention to those two levels, the golden Fibonacci again and the 224% Fibonacci extension again. False breakout below, I searched for an extension at 161 and then the 224% Fibonacci extension. As we can see, the market it's not offering any pressure at those levels. Actually, the first one failed just by a few points, and then the 224% Fibonacci extension used it as support already. So the level that was supposed to act as a resistance, it was already used by support at these lows. As you can see, the market finding some pressure without trading below that level. So we are already threatening the previous structure highs, previous weekly fractal resistance, and based on what we have on a higher, or let's say on a bigger picture, let's measure this one for now, 78.6% Fibonacci retracement level. So based on the criteria and the variables that we have at our disposal, and based on the recent price action, we should not ignore the potential butterfly pattern at 127 extension, and if that pattern fails, we may see an extension to the golden Fibonacci also. So we have two levels also above as potential elements of pressure: a fall 78.6, a fall again 127, or the 161. The one that I'm searching for now, it's this one, the bearish butterfly pattern, which is projected at 156.75. So if the market decides to approach those levels, and because the market is ignoring this very sharp pattern, I will try to identify the best moments to get involved at this price zone, this bearish butterfly pattern on hold at 156 1.75. Euro versus the New Zealand, projected yesterday. This has a potential bearish shark pattern at the weekly fractal resistance. As we can see, the bearish butterfly pattern at work in this situation, in this case, also shared among our communities online. So basically, bearish Gartley pattern, nice fall, searching for the 38, almost a 50% Fibonacci retracement level, and now I projected this bearish shark pattern at the weekly fractal resistance. Of course, that pattern can also be formed directly at 224% Fibonacci extension without ignoring, let's say, ignoring this golden fib, ignoring that previous weekly fractal. The market can go directly to those levels and print a pattern and eventually ignore that Fibonacci level also. But what I expect to happen is a potential pressure at the previous structure highs, converging with that bearish shark pattern at 161, and even if the market decides to fall, and eventually the market will trade higher again. If that happens, I will pay attention to this 224% Fibonacci extension position or projected at 171.13. So, but for now, I'm paying attention to the most, the closer one at the weekly fractal, the previous structure highs. Pound versus Australian dollar. I shared this morning this one as a potential, as forming the potential heads and shoulders. If that happens, if that triggers, if that pattern gets validated below the daily fractal support, we may see a fall back to the 78.07. So basically, if the market decides to trade below the daily fractal, we may see the price falling even harder, without ignoring two other elements. One of them, the trend line support, holding these previous structural lows, which may offer some pressure also, and the bullish cipher pattern. So the bullish cipher pattern, if formed, it will complete at 79.09, and if formed, it will target the 38% fib. So I will not expect that cipher pattern to offer me a new rally and a retest of the monthly fractal. So I will expect nothing more than the eventual retest of this next zone for the heads and shoulders, kind of more similar situation like this. So I will expect a 38% Fibonacci as a first target. If that happens, even good. If the market decides to trade the second target, the golden Fibonacci level, even better, of course. But again, let's stay tuned to that possibility. Let's see how the market reacts as soon as it approaches this price zone. Okay, if the price decides to approach that zone, we should pay attention to the price action and see if the market decides to feel some pressure at this zone. If that happens, that may form the cipher pattern. If not, we will see eventually a retest of the previous structural lows. Pound versus the New Zealand. This one is very similar to the ones that I shared before as a 2618 trade setup, and we are already trading the default targets. And as we can see, actually, let me delete this ABCD pattern. We have a technical double top. Okay. We have the golden Fibonacci retracement as resistance. There, actually, I'm wrong because the market didn't. I'm wrong because the market did not break the support level, so the market did not trigger. What we have now is the potential, validation of the double top here, the market threatening the violation of these lows, that we may be facing the validation of this technical double top, with the market now threatening the next zone and the support level. If that happens, we may see the price falling. Actually, I can see the price falling back to 194.40. I was seeing this 61.8% Fibonacci retracement as a 2618 trade setup, but it's not validated because the market only now is trying to validate the technical double top printed above. So even though I shared this as a potential technical double top, we just need to wait for the market to trigger that pattern for us, and I believe the market is now offering that opportunity or that trigger to go to trade even lower cable versus the New Zealand. The Dixie I shared also on my previous video, I believe. The market, I shared these as a potential shark pattern at 224. I projected that pattern at 92.94, but without ignoring this trend line resistance. So, in the reason why I draw that trend line resistance when I projected that shark pattern is because I will not be surprised to see the reinforcement of that trend line approaching from above or covering the previous structure highs. And that was exactly what the market has done after projecting that pattern. Actually, I can also show you that that projection. Open here. So small. Why? Actually, I can open my browser. Dixie. So I projected this one. I'm not sure when. To March 29th. Exactly, March 29th. So I projected that pattern once the price actually completes a pattern 92.94, as you can see, but there is also a trend line covering the previous high. So we should not ignore that possibility. And of course, the market pushed above, reinforced the trend line, and then starts to fall from here. We have multiple patterns projected at the same price zone, so this was not a surprise for me. That recent fall wasn't a surprise. What it was a surprise, it was a retest or the reinforcement of a trend line, because we have the patterns completing a few points below. That was a surprise, but at the same point we need to consider that possibility. So at some point it's a surprise, but it's not. So you are already counting with that. But if you trigger your trade setup, if you trigger that pattern, of course, if you enter the market as a short, for a short side, you are not expecting the market to go there and retest that trend line. Of course, if you short that market, it's because you are expecting the market to fall immediately and not expecting to short the market and waiting another week to see the markets to start to come in my direction, of course. So, but that being said, we have those multiple patterns projected, one of them at 92.76, the other one at 92.94, and we have now the potential, or let's say we are approaching the golden Fibonacci extension level for a minor bullish crab pattern, 92.15. So this is also a pattern which will converge with this minor golden Fibonacci retracement level right here. And we have the major 38% fib, so the major Fibonacci retracement from these weekly fractal support, the 38% Fibonacci there. 91.55 if we want to consider this bearish shark pattern printed at 224% Fibonacci extension as a valid pattern at this point, which may be a valid short. I will expect at least the 50% Fibonacci retracement to be reached, because it's a default target for the shark pattern. And then from there, this is also the weekly fractal resistance. It can be turned into a support level. So let's see if the DXY, the dollar index, will fall into this price zone. If that happens, as I said before, I will not be surprised to see that weekly fractal acting as potential support level. Now, to finish with gold and silver, I also shared this yesterday as a potential technical double top for gold. Of course, that pattern will only validate above the daily fractal resistance, which is positioned at 1755. We have default targets for that pattern at 1808, which may put the price searching for that 200 daily moving average. Actually, the daily moving average pointing a few points higher, 1858. So the 200% Fibonacci extension as a default target for the technical double bottom if triggered above the daily fractal resistance. Note that resistance was formed below the monthly fractal support. So we have there the monthly fractal support, and the market already traded that level and formed a fractal resistance there, and then of course followed by the technical double bottom, which will be confirmed and validated above the trend line. For silver, as I projected before, on a lower time frame, let's say this is a 2 hours, 4 hours time frame, I shared this potential bullish shark pattern before. Actually, I shared it on Twitter also, I believe. I shared it among the communities there, saying eventually this is a place or a price zone that we can expect for a bounce. We can expect a bounce for silver, and I can't get tired to repeat this. We never know the outcome of those patterns. We know the risk reward they offer us, and we know because we know where they invalidate, they become very friendly setups to trade, because you don't need to put at risk a lot of money, and you will maximize your profits if the market decides to correspond to the default expectations for that pattern. So that being said, I decided to enter this bullish shark pattern above or printed below, but I have also projections for a potential bearish cipher at 2603. Note that we are trading the 50% Fibonacci already, which is also the default target for this bullish shark pattern. So the default target for the shark pattern, 50% Fibonacci retracement right here. So this is a retracement for the pattern, the structure between the daily resistance, daily fractal resistance and daily fractal support. So it's a pattern printed between those fractals. So we need to measure the 50% Fibonacci retracement, or the 50% Fibonacci level between those fractals. That is the default target for the bullish shark pattern printed below at 224% Fibonacci extension. So at this point we have this bearish cipher pattern projected above. I never know if the market will form those patterns, and even if they form the pattern, we never know the outcome. So, and honestly, at this point, if the market decides to print this cipher pattern, I prefer to ignore that pattern, because if that happens, I will not be surprised to see a retest of the daily fractal, or even a retest of this trend line resistance, or previous trend line resistance, which may act again as a support. So we have these lows at 2189 and 2401, and then as a support. So we can draw that trend line support based on those lows, and then the market rejecting as a resistance that same structured trend line. So let's say if the market decides to approach these price zones, I admit there can be, let's say, a limited pullback or a limited retracement, even though of course the market can print new lows also, but I'm not expecting that to happen. So that being said, I admit the formation of the cipher pattern and a limited pullback eventually, but if the price decides to approach that daily fractal, I will not be surprised to see also a retest of this trend line, the previous trend line support. Of course, if the price decides to recover the trend line, it will be forced to trade above the weekly fractal, which may act as a support later, and if that happens, we may see then a violation of the resistance printed above, acting as a trigger for more for more upside momentum. So for silver and gold, for now, nothing very specific. Note that silver is trading this trendline resistance also. So we have not only the 5-0 sequence, which may offer a pullback, okay, this 5-0 sequence after a sharp pattern reaching targets, that completes also the bearish 5-0 sequence as mentioned before. So I will not be surprised to see the price pulling back even further from here. But again, a violation of this trend line may force the formation of the cipher as an outside formation, an outside candle, let's say, with the price trading outside this bearish structure, this bearish momentum, and then recovering again that structure later, if that is the objective. But again, we never know if that is the point. We know where the pattern will complete, and we also know where the price will invalidate. So basically above the previous structure resistance, if the price decides to trade above that fractal, that will threaten the invalidation of the cipher pattern, as usual or as always, and we should exit our trades, at least for those who want to try to get involved in that direction, or the bearish side of silver, which I will not suggest, at least for now. SPX 500, I shorted these yesterday, I still expect, we never know what will happen from here, but there's a bearish sharp pattern printed at 40.83, so I have my shorts, I have my targets at 39.71, so let's see also what will happen there. And that's it for today. I believe we have a few patterns already that I shared with you today. Let's see how the market will react. I hope you enjoyed the video. As always, this is not the objective. The objective is not to let's say to motivate you to get involved with the market, especially if you don't understand very well the methodology and the price action, and if you don't have a clear notion of what you are doing. I would say that I prefer you to stay away, to sit above your hand and just observe, and you can learn a lot just observing charts and observing the price action. For those who have more experience, of course, I'm not here to provide you with my trading suggestions. I'm just sharing some educational content that I hope will be useful, at least with those who are learning or trying to learn how the market behaves. So as I said before and multiple times, I have and just to finish my video, just a small introduction to my service. I have a Telegram private room where I tend to search, where I tend to share among a small group of people some of the opportunities the market offers on those advanced pattern formations. So this is my Telegram chat room where I share with a small group of people. I share some trades here, and well, I invite you also to join that. You can join that going into my website at tradingjazzfx.com. For some reason my browser is not loading my main image above, and actually for some reason it's not loading also my chart of the week. Let me try to recover that with another browser. Plan your trade, trade your plan. You already know how it works. We project the pattern, we identify the potential pattern, and we wait for the market to go in our direction after the price, after completing our pattern. So basically this is a very simple website where I share just some small information or just a few lines. I tend to put there a chart of the week. I work with Telegram. I just need a fast and reliable app to share the content with my subscribers. So push notifications. All my trades are sent with detailed information, stop loss, targets, and I tend to also I share the position management strategy for that specific trade, which consists in closing a portion of our initial position size at first target and then try to trail our positions at the second target. So some reading suggestions also, where I put some books there for fast links, and free educational content as always. That's some of the charts that I shared on TradingView, which may be useful for some of you if you want to understand how those patterns behave. So you can also follow me on those and some of those social websites. So I invite you to join. Of course, in here you'll just have access to the trading opportunity itself. You don't have access to my analysis and to all my speech around those charts. I tend to share something like what I shared before with you, a simple picture of the charts that we are trading, the trade that we have, with targets already predefined, our stop loss, and as we can see also some management strategy yields also some like this example, close half of the initial position size, stops move it to your entry or to your entry point, or to your break-even point. And as soon as the market touches the second target, we keep closing another portion of the remaining. So if you close, let's say if you trade 2 lots initially, you close 1, and then at the second target you close half of that remaining lot. So you only keep you'll keep holding that half a lot after the second target being reached. So I tend to be very simple in that process in order to create a routine process. You identify the pattern, you identify the targets, you identify your limits based on your risk-reward approach, and you try to repeat that process over and over again. So that being said, I share every simple chart, every simple trade that I share it with the same always with the same methodology: targets, stops, partitioning, trailing stop. That's my point here. And as soon as you get used to that process, it becomes very simple to trade those events. At some point, I just need to share the pattern with you. You'll pick your Fibonacci levels, and you'll already understand how to measure your reward, your targets, your limits, your exits, and what to do when the market reaches those levels. So for today, it's everything for today that I have for you. I will try to update some of those charts later, and I will try to make another videos for you. I hope you enjoyed this video. If you like those videos, please press those buttons below, subscribe the channel, press that like button, and press that bell in order to be notified with the next video that I share here. Again, it's a pleasure being here. I hope you enjoy. See you in the next time.